Hey everyone, it's 1:30. The market's been closed here a few minutes. Let's run through what the USDA said today and kind of look at what it looks like on our balance sheet, and then we'll look at the charts. So big picture, the surprise came on the stocks report where the USDA said that we had 7.4 billion bushels of corn stalks versus 7.47 billion as an estimate, so about 70 million less than what less than what the trade was expecting. And on beans, it was 57 million bushels less, coming in at 1685 versus 1742. Now, as far as the acreage goes, the corn trade was expecting 90.88 million acres, and we ended up with 91.996. I've got that number updated here. And for soybeans, it came in at 87.505 versus 88.242, so a little bit less on soybeans, a little bit more on corn acreage. So let's look at what these numbers do to our ending carryouts on a forecasted basis, okay? Now, if you assume normal weather and trendline yields, and you assume that we harvest the normal percentage of 91% of the acreage, and you take the stocks down and you just take it straight off beginning stocks, so the 70 million that they said we don't have, we took that off. And then here I just went ahead and was generous and added 250 million of new demand on top of what the USDA previously said we had. And with those numbers, you come to a new crop ending balance sheet of 2.3 billion bushels and a stocks to use of 16.6%, which is not bullish. And then if you want to just say, hey, well, what about weather premium? You know, what happens if we drop yield to 175? Well, that drops you to a 1.8 billion, which isn't, you know, $2 corn. It's not 3, but it's also not 8. So here's the point. The acres are now known. It's a lot of corn acres, and yes, we know that we're tight, but tell us something we didn't already know, and we need new demand. Otherwise, we have a really big carryout, and we're going to grow it. So really, the only way from this point forward we see to shrink our carryout is to have overwhelmingly strong new demand or a weather problem that either causes, you know, a big abandonment or just a lower national yield. Otherwise, we are getting higher on our carryout. And so we think that we still need to be hedged. And you'll see that when you look at the old crop versus new crop trade, right? Now, soybeans, same exact scenario. We have lots of acreage. We have a high yield. We take the bushels that were lost straight off of the beginning stocks, and we apply that to what the USDA says our demand numbers are, and we still end up with a bigger carryout. So nothing shifted from our perspective longer term. We are looking lower, and yes, we understand we have a growing season ahead of us, but that's the bullish case is, hey, yield is going to come down, and demand is going to resurge, and we're going to have to lower the beginning stocks even more. Well, let's take a look at what the charts look like exactly so we can see what the markets are telling us to do. Here is new crop soybeans. We had a big, nice rally. We closed well off of our highs. We closed 16 off of our high. We closed right on our hedge line, which is right below the 50% retracement level of the large move higher of this big decline. So new crop beans didn't do any chart damage to a downtrend here today. And in fact, they actually sold off and left this long upper shadow, which would be bearish. But in conflict with that is the old crop, which did post a nice strong day. I mean, it was up 30. It was off of its high, and it was, but it failed to close back inside the daily cloud, which is significant. Now, what I want to show you that is really interesting on a report day, I'm going to drop this down to a 30-minute time frame, okay? And this is the 11 o'clock bar right here. And you can see that pop up right there. This is the 31st at 11, which means that the opening tick here is where it was prior to the report coming out, because that's the closing bar at 10:59 and 59 seconds. So where did we trade from the time the report came out to the close? Well, we we were trading 14.93.5 at this open, and we closed the day at 15.05. So we were up just about 12 cents on from the time the report came out to the time where we closed, and we were up about 20 ahead of time. You know, did somebody have the report early? Probably. That's why it started getting bought. But who knows? Let's just call it what it is and say, hey, we were up 12 on old crop from the time that bullish report came out. On new crop, same time frame here. Let me drop this down to the 30-minute chart for new crop. Here is the 30-minute bar. So we opened this bar at 13.19, and we closed the day at 13.19. So zero net change from the time the report came out to the time we closed on new crop soybeans. We rallied the spread 12 cents, but new crop didn't move at all. To us, that's not overwhelmingly bullish. Okay, now let's look at old crop corn. Where is my old crop corn? Well, I guess we'll just do this one, and here we are. Okay, old crop corn. This is your 200-day moving average. Notice we traded above it and ended up closing down below it. We didn't break up into any major resistance, and we did not break into or hold the daily cloud. We are above our hedge line, and we are trending higher. The distance of this correction from the low to here versus this low to this high, which would be this would be an A wave, this is a C wave, and the relationship in price distance between this wave and this one is 1.382, which is a Fibonacci retracement extension, which is exactly where that would have likely reversed from, and something that we should keep an eye on moving forward. If we drop down to the 30-minute analysis and show you exactly where we were when we came out at 11 o'clock, we were trading right at 656.25, and we closed at 658.5. So a 2-cent gain from the time the report came out to the time we closed the day, which tells us that there wasn't a whole lot of unknown surprise out of that report. So it'd be really interesting to see how this market trades Monday and Tuesday coming into the new month. Now let's look at December corn and show you the same analysis. No chart damage here at all. Remember that carryout is huge, so this downtrend is very much still intact. And at 11 o'clock, where this was trading is 569.5, and we closed at 566.25. So about a 3-cent lower close on new crop corn versus the 11 o'clock bar. So you have old crop that went up 2 and new crop that went down 3. Our bias is that ultimately new crop wins in this race, and value is going to come out of that because a 2.3 or bigger carryout is too much. Now that's going to be muted some because of the bullishness of the old crop number, but still you can maintain a bullish spread, and basis can do the work here to regulate the flow of those bushels as prices come down. So nothing's changed from our perspective, and isn't going to until we see some type of daily closing action above this daily cloud. We're too close to it to call anything else the driver at this point. We just want to see this market either push away from it to the upside or to the downside. Either way, and anywhere in between these points is going to be pretty much a neutral trade from our perspective. Okay, wheat, not a whole lot to talk about in wheat. It was it traded both sides of unchanged today. It did have an outside day to yesterday in a bullish engulfing candle where it held its strength, and it did technically close outside the top of the daily cloud. So that is something to pay attention to. But because it's still within this day's range here of, what day was that? Friday, Thursday, Wednesday's range at 80, high of 80, 880 and a low of 53. Since we're still inside that range, I think wheat's pretty neutral. But all eyes should be on those corn spreads, because wheat's probably going to go with corn whichever direction it goes. Okay, that's kind of a lot of information. This is the corn spread from old crop to new crop. Um, and you can see it just keeps getting wider. It was up big today because of the bullishness. Remember, I think what the corn market has to do, and the beans, they have to decide whether the stocks are so low that we need to ration old crop or not in order to bridge to new crop. So new crop values are weak, new crop acreage is abundant, and assuming normal weather, you have to assume that that we're going to have plenty of bushels coming come October, September, October, November. So the question the trade has to figure out is, between now and then, how high do we need to be? Do we need to go up higher and kill demand, or do we need to just keep it steady and hold values where we are until we get to new crop? That's what the trade's going to be digesting over the next week. I think it's going to work sideways to lower. I think new crop is so bearish, we're going to mute any big rallies, absent some other story that develops, out of Ukraine or somewhere that's more bullish. So I think we're content with where we are, even though beans were a little bit more exuberant than we wanted to see them today. I don't think it warrants any change given the weakness in new crop, and we'll see where we are, to close Monday and Tuesday, because I think that will be a much bigger tell than what we got with the 2.5 hours of trading action today. All right, that's all I got for you today. It's 1:45. I hope this is somewhat helpful. It gives you a little bit of color behind what's going on. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a terrific weekend. We'll be back with you Monday, and maybe early in the day, depending what the overnight trade does. Talk to you soon. Have a great night.